All right, guys, I get to talk about what we do at Benzinga a little bit, which is exciting for me. A lot of people think that we are an events company or that we are 100% cannabis focused. Cannabis and cannabis events are a part of what we do, but not entirely all of the business. We are a full-fledged financial media company. So that means we cover all things publicly traded stocks. There's a lot of people who make a lot of money in this space, but there are still problems that exist. A lot of these solutions out there, especially these big ones you see like a Bloomberg, Reuters, FactSet, they are very, very institutional. They're also pretty old school. We approach things with the goal of making information easier to consume and coming in with the angle that there should be more transparency. Access shouldn't be as fragmented. So, a couple examples of how we do this. On the left-hand side, we've got an example of a Benzinga article. So this is on our benzinga.com site, a place where we get a couple million readers a month. And you can see we've got the exact same story covered, I think, by the Wall Street Journal on the left-hand side. And so, we provide our readers, it's easy to come in and see what happened, why it matters, and what's next. We, think that using formats and doing things like this is a lot of what's allowed us to grow to having over 20 million readers a month. This is only about a third of the Wall Street Journal article. So if you want to get to the bottom of just what is the heart of this news item, you're going to need time to do it, and you're going to need to be relatively savvy. There's a lot of jargon in there and those sorts of things. Another example of how we are able to take share in this crowded marketplace is our Why Is It Moving? It's an API product that we sell to firms that gives the one sentence reason why a stock is trading higher or lower on any given day. So something which is not entirely easy to find is I own shares of what's the example here? Tesla. Tesla is up. Why are Tesla shares trading higher? I might have to dig through Twitter or StockTwits. I might have to read 3 or 4 news articles, because 2 of them are going to be automated, to really get down to the reason of why it's trading higher or lower. We've got a product that just gives that one sentence reason to say, here's why shares are up or down on the day. Something else that I think is interesting is that it's not easy to build a media company, especially today. We all hear the news of newspapers closing down or mergers, or there's a lot of high-flying media companies that raise a ton of money and went out of business or consolidated really quickly. We think a lot of what sets us apart is that we didn't do it with an ad-driven model. Instead, we focused on building a subscriber base, doing B2B content licensing, hosting events. And what that allows us to do is it allows us to take a lot of freedom in actually adding value to users. We don't have to focus on the clickbait, on getting the traffic and that sort of thing. We're actually able to create content that adds value, makes lives easier. And so to show how our business works in one pretty easy diagram is what we call our media ecosystem. At the core of it, we produce content. When we got the business going, we didn't know exactly how we'd make money, what our path to profitability would be, or any of that sort of thing. But we spent a lot of energy on building up our readership. We built syndication partnerships. We spent a lot of time figuring out what do people want to read, how do they want to read it, etc. And basically the hypothesis was that if we can build up that readership, we can then figure out how to make money from there. Well, if we have the eyeballs, we have the influence, we can figure it out. And so what that's done is it's led into a B2B content licensing business. So that's us selling content to other brands and also into subscriptions. The thing that's beautiful about that is every time that we make a sale, that's more readers on our content. So if we sell something to, let's say, Dow Jones, we get money for it, and then 2, that's hundreds of thousands of Dow Jones users who are now seeing the Benzinga brand and seeing our content. So digging a little bit more deeply into the ways that we make money, we talked about the B2B content licensing. These are deals that are not easy to get, but because we have that media backbone, it's easier for us. We're able to go to places like TD Ameritrade and say, hey, your users are leaving your website and coming to our website to read news or to read the content that we're producing, because we think we do an especially good job of it. You can go ahead and license that content from us to keep those users on your site. Events, also another big part of our business. I think the reason that we are able to have a lot of success with our events is that we've got the readership, where we're able to be connected to the most interesting companies and also to the investors. And then we can take the content that comes out of these events and push them back onto the site and continue to build that base. So, we've had some amazing publicly traded, some amazing private companies here, all talking about, cool things that they have coming, things that are happening in the space, et cetera. We report on that. And so then it's more people coming into the Benzinga site, learning about our events, and continuing to build the business from there. And then the last thing is the subscription side of things. We've got several million people who come to our web properties every month. Again, we're not relying on the ad dollars. It's only a couple percent of our revenue. We want to create really, really good, intriguing, engaging subscription products for those users and capture revenue that way. And then, of course, we let's talk about cannabis a little bit and where cannabis fits into all of this. Again, cannabis is part of what we do and what we cover editorially and with our events. The thing that sets us apart is that we've been covering the cannabis market for about 10 years now editorially. This is times when the Wall Street Journal and Bloomberg and Dow Jones and the Post wouldn't let their reporters cover cannabis, because there was a lot of uncertainty in the space. A lot of people viewed it as a fad, just as potheads rather than actually figuring out the real business behind it. And so over that period of 10 years, we've built up great relationships with a lot of these companies. So we've got the companies that we know, the loyal readers, the people who have been in the business for a long time and followed this market for a long time, know Benzinga because we were one of the only sources covering it. And so that's led us to grow our readership to almost 1 million people a month. And then again, we can drive those readers to these live events. We want to make everything easier to consume. We want to level the playing field and give people the opportunity to meet these brands in real life as an extension of that coverage. And so things that are on the horizon for us. We've covered the trading market, we've covered the U.S., and we've gotten a lot of traction over the years that we've been doing it. But there's a lot more room for us to continue to scale and grow, and exciting things that we've got coming up. So in the heart or in the lens of this ecosystem that we're talking about, new products is something that's highly interesting for us. So if we want to take cannabis as an example, right now we've got our cannabis readership, we've got our cannabis event. We think that we're very good at doing cannabis content and curating content. We want to start offering cannabis content services to brands. Right now, we don't do any of that, but we've got a full cannabis desk who's poised to be able to go out and talk to these companies and figure out what their content needs are and how we can take what we've learned from the cannabis content side of things and drive their brands. Another thing is that we've got, let's use TD Ameritrade as a client. We service them really, really well for their trading customers, but we don't really touch their investing customers, and that's a big part of their business. So we want to add products to these existing clients that we already have. Another thing that's super interesting for us is international expansion. 2019 was a big year. It was the first time that we reached out of the U.S. We went north a little bit, and we started covering Canada. That's both on the editorial side of things. We started reaching out to Canadian firms to be licensing partners and hosting our very first events in Canada. We think that's a way where we can take this exact same model that we've used in the U.S. to build, the significant readership we have, the significant B2B partners that we've had, and scale it out to additional geos. So attacking the English-speaking ones first, but then there's room to go to India, to go to Europe. We've got about 40% of our traffic on Benzinga.com comes from outside the U.S., and so those are really easy places for us to get into and build out our teams there. And so I went through this super quickly because I'm the last thing stopping us between an open bar, networking, and being able to hang out with everyone. But any questions that anybody has on Benzinga? Yep, go ahead. The thing that I'm most excited for is to continue building out really cool products. We've spent a lot of energy in the current year figuring out things like, okay, people want to just see that one sentence reason why a stock is trading higher or lower. Or, okay, we've identified that people, cannabis readers resonate really well with this type of content. How do we take what we've learned there and scale it to brands? So those are the things that I'm very excited about. Go ahead. It's not named after the Big Bang Theory. There's a character on that show who says Benzinga, and thankfully for us, that show is fading from popularity. It used to be like the question I would get from everyone was, oh, Benzinga, like you do something with Big Bang Theory? That's not the case. We went back, the catchphrase and the brand started around the same time. There are multiple theories about where the name came from, and our founder, Jason, is not entirely clear on which one it is. I think he likes to leave that mystery in there, but the leading hypothesis is that it is a word that he made up as a child with his grandpa when they were practicing reading, and it stuck with him throughout the course of his life. So that's the leading theory. Go ahead. Yep, for sure. So if you had fun today, if you got value today, you're able to network and meet people. We're doing a very similar event in Miami in February. So if you are up in Chicago or New York and in the cold, get down to Florida and defrost a little bit. February 24th and 25th. At Fontainebleau. Anybody who's here today, we have a computer set up at registration where we'll be able to sign up tickets for half off. I think that the list price is $400, so you can get a ticket for $200 if you want to sign up and register for that today. If you want to tell people how much you love this event today, what's the answer? Yeah, I mean, we want testimonials, but where? Where should they go? Go to registration. If you're willing to give us a testimonial, go to registration. That would help us to blow out the Miami event and get even more people there. More networking. Cool. Yep. Yep. Yeah, so we use market cap cutoffs in order to define our universe. So if it is like truly like a micro cap stock, like a $10 million market cap stock, for example, we look for a 10% move. We've found that the vast majority of the time when a stock is having a 10% move, there's some sort of fundamental catalyst driving it. If it's not apparently clear, we hit the phones. We'll call in the analysts if there's analysts covering the stock. We will call the companies and talk to the CFOs and the investor relations teams to see if they're aware of anything. And then lastly, we'll also maybe make some calls to the buy side if there are any big buy side players in it. It's not 100%. About 95-ish% of the time, we're able to come up with here's like the clear fundamental reason. But again, there are cases where it's just sort of some market momentum, or there may be somebody put out a large market order instead of a limit order and that sort of thing, which is what makes it tough. All right. Thank you, everybody, for listening to me for a few minutes. Thanks for coming out, and let's go party.